What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we're seeing a pullback from the extremely critical resistance zone and we are very quickly approaching some very critical support levels. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, over the weekend I posted the Stocks channel members only video for absolutely free, so if you haven't already, check out that video. It's very important in understanding where we're at in this market, and I very clearly outline both of the bearish and bullish scenarios and give you the exact price action you need to look for. So if you haven't already, go check that video out because there's a lot of very important information in that episode. Alright, so today SPY was down 1.8% and we continue to see that rejection from that extremely critical resistance where the big bad bear is living, which is going to be that level at SPY 408. That is our declining resistance trend line that defines this bear market, and that bear is going to defend that level as long as the bulls allow him to. So for that reason, it's now back on the bulls to prove everything, because the bulls need to prove the bear market is over by blasting through that resistance and scaring the bear all the way back up to much higher resistance levels, which could be up there right around SPY 430. However, we're not going to speculate, we're going to make the price action prove it, and right now the bears are proving they're still alive and well at resistance, driving prices all the way back down towards support. Now there's going to be a few critical support levels to pay attention to, and the first one we closed at today, which is going to be this level at 399, and then just below this level we do have the rising support trend line and rising 20-day simple moving average, which is currently sitting at 396. So that is a rising slope of support, so it will rise each and every day, so do keep that in mind. And if the bulls lose that support, they're instantly going to be a lot weaker, and then we'll likely see the bears trying to drive SPY down towards 390. Below 390, the bears are victorious and they're very easily going to fill the gap at 381 and then can continue to drive SPY lower from there. Now in the event the bulls defend support and we see buyers between support, we are very likely going to finish out the rest of this wedge, which if you just look at the vertical axis, that does take us out to the middle of December. So there is the possibility, even though I think it's a slim chance, that we continue to chop around and finish out the rest of this wedge. However, I would expect to see more high volume on a breakout, which is going to be the breakdown below SPY 397 to 396, or the breakout above SPY 408. Above 408, we have very critical resistance at 414, which is going to be a very critical resistance in defining this bear market because that is the 50% retracement of the entire bear market. If the bulls break through all of that resistance, they're very likely running to 420 and then 430. So know these levels and make sure you're prepared for either breakout. You should not only be trading expecting a breakdown or trading expecting a breakout. Make sure you let the price action guide you and just be prepared for any scenario. Remember, it's not about guessing where the market's going, it's about making profits from your trades, and you want to put yourself in the highest probability chance to profit. That is going to be bear trades from resistance and bull trades from support until those levels break down. Then you can instantly jump ship on long trades if we lose support, or jump ship on short trades if we blast through resistance. How you write your trade plan is up to you, but make sure you know both scenarios and let the price action and trends guide you from there. On the Nasdaq 100 triple Qs, we were down 1.68% and we continue to see a rejection exactly from the level the big bad bear is waiting at, which is going to continue to be that critical resistance at 293. The bulls are going to need to defend the support trend line at 286 and the rising 20-day simple moving average at 284. Because if they lose all of that support and we see the bears pushing down below 282, we are very likely coming down to fill the gap at 268. That is a lot more downside if the bulls lose support, so you instantly need to get a lot more bearish if the bulls fail to defend support. Now in the event we get the bull breakout above 293, we're instantly going to be getting more bullish for a test of the negatively sloping 200 daily moving average, which is currently at 305, and then the gap fill at 308. Again, we're not making any assumptions of which scenario plays out. We're going to let the price action guide us. So the bears are waiting for confirmation with the break below 286 and the bulls are waiting for the confirmation with the break above 293. On the Dow Jones, we were down 1.37% as we continue to follow our arrow down towards our price target, which is going to be this gap fill at 331. We don't necessarily have to go down there in a straight line, and we could still find support at 337.5, which is also going to be the rising 20 daily simple moving average. So keep in mind the market rarely moves in straight lines, so if we get down to support and we start to bounce, we could still get a bearish pattern with a double top off of 347 and still come fill the gap at a later date. But I don't see any way that that gap remains open for much longer. So that is definitely going to be our downside price target in the Dow Jones. So watch that support at 337, and if that fails, we're easily coming down to fill the gap at 331 with the upside resistance at 342 and the gap fill at 347. And in the event of a bullish breakout, we will be looking for the next resistance at 353. On the Russell 2000 IWM ETF, we could see it's starting to look like a double top rejection, but we do not have any confirmation of this pattern until we break the neckline down here, which is right around 181. Below that, we easily fill the gap at 178, and then we could retest the daily lows around 174, or possibly even go lower and come all the way back down to the previous lows that defined the bear market, which is down here in the 160s. We're right here at very critical resistance between 185 to 188, and that is the exact level that we're seeing the double top rejection from, so that is going to continue to remain strong resistance. On a bull breakout through this resistance, we will have the next upside price target at 195. On the ARKK ETF, we were down 5.48% with that sharp rejection from the resistance at the 50 EMA, which is at resistance at 38. And as you can tell, we are right back down below the support at 36.5, which means we're very likely coming down to fill the gap at 34 and then retesting the previous low at 32.5. On a break below all of that support, look for the next price target at $30, and the strong resistance remains 38 and 40. On the VIX, we were up 8.86% as we see the VIX spiking from this support zone, which is just right around 20, which is exactly where the bears have been stepping in all year long, which could mean that we're getting ready for the next leg lower from the strong resistance. The bull market scenario will be the VIX heading down towards 18 as we see the indices breaking through resistance, but we need to wait for confirmation in the price action that that is the scenario playing out, and right now it still looks like the bears are in full control from resistance. On Bitcoin, we're currently down 0.83% as Bitcoin continues to find resistance in the mid 17,000 range, and we can see somewhat of a bull flag developing below that resistance. Above 17,550, we should easily run back up to the resistance at 19,000, and we have a very critical support zone down here at 16,000 because if we lose support, we're very likely going to 14,395. On Amazon stock, we were down 3.31% with another rejection from that resistance at 97, and we did lose the support we just bounced from at 92, so we are very likely coming down here to fill the gap at 89.5. Below the gap fill, we can retest the low at 86, and below 86, we could go to a brand new lower price target at 77. The bulls need to break 97, and then next strong resistance will be 102, and we're not getting bullish until we can see the bulls breaking through all of that resistance. On Microsoft, we were down 1.89%, breaking back down below 252, which is decreasing the probability we're going to 265, but the bulls are alive and well as long as we're above the breakout at 247. Below 247, look for a retest of support at 242, and if the bulls lose all of the support, we will be looking for the gap fill at 228. Above resistance up here at 255, look for the gap fill above, which is also going to be the negatively sloping 200 daily moving average, and that level will be 265. On Nvidia, we were down 1.58% with Nvidia closing right around this resistance at 166, which is also trying to act as support because we did get the bull breakout. It does look like the bulls are trying to get to the resistance trend line at 176, but I expect to see the bears showing up at that strong resistance, which means we should be coming all the way back down to retest some support. In the event of a bull breakout, look for resistance at 179 and then 192. On a breakdown below the support at 166, we could come back down to 156, and then below 156, we will be looking for the gap fill at 142. On Tesla stock, we were down 6.37% as it does look like Tesla is getting rejected from that resistance at 197 and coming back down towards support at 177 and this gap fill zone around 170. Below the gap fill, we could retest the low at 167 and possibly even put in a brand new 52-week low at the price target at 163. We're getting more bullish above 197, but we still have strong resistance between 204 and 205. And if we clear all of that resistance, we could run all the way back up to 230. On Apple stock, we were down 0.8% with a very sharp rejection intraday from the strong resistance at 150, and we're still closing below the resistance trend line and just above the support zone at 146. If the bulls lose support at 146, the bears are going to push all the way down towards that gap close at 138. So do get a lot more bearish if the bulls can't hold support at 146. The bull breakout will be above 150 for the next price target above at 155. The financials were down 2.48% today with a sharp rejection back down below the 20 daily moving average, and we're still at risk of filling the gap to the downside at 34.35. The industrials were down 1.67% today, still above a rising 20 daily moving average, but we also do have a gap to fill at 97. The healthcare sector was down 0.96% today, still looking very bullish with the price action above all of the moving averages and a very strong bull trend. The energy sector was down 2.97%, breaking down below that critical support at 88.5 and trying to bounce off of the 50 EMA. From here, we could start to see a rollover look and lose the bull trend and come all the way back down towards support at 84. So jumping back over to the SP 500, as you can tell, the bears are showing up exactly where you would expect to see them, which is that critical bear market resistance level that I've been warning you about. And so far, the bulls have not yet lost support, so we can't rule out either side of the trade. As I always tell you, know both scenarios, both the bull and bear scenarios, and let the price action guide you on which one is playing out. You can have an idea of what you think will happen, but it should be backed up in your trade plan with price action confirming it. Otherwise, you are just guessing and you are very likely not going to be a disciplined trader. So know both sides of the trade and then act accordingly when the price action tells you to. And as always, make sure you're managing your risk very tightly, because the only way to remain profitable is by managing your risk. If you have not yet claimed the Black Friday deal on Bank Trade Alerts, this is going to be the very last day to claim that discount. All you need to do is apply the coupon code Black Friday at checkout and you can get 50% off your first 2 months of Bank Trade Alerts. So if you haven't already tried Bank, now is the best time to take advantage of that discount, and Bank is absolutely crushing this market. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.